You want to get long a strong stock, but you're not sure where and how to enter. You've tried in the past only to get stopped out. You failed to enter because you fear you're going to get stopped out again and just watch that stock soar higher. This can be very frustrating. Well, in this video, we discuss in step-by-step detail how a trader on the desk entered a strong stock successfully. We hope this video will help you improve your trading so you don't miss out on your best trading ideas. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're going to learn how to enter a strong stock. You're also going to learn what we most want to see with stocks after they have earnings, how to use reading the tape for better entries, how to use an ETF to better gauge the strength of your trade, how this trader can be making better trades so he realizes his immense potential. And as always, we hope these videos provide the greatest value to you of learning how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
I want to talk today about my second day play setup that I took on Nvidia. It was a break and retest of pre-market high. Now this was a setup that I took, and really the setup could have been anything, but really what I was doing here was watching the price action at my level, determining whether the price action was holding or failing the level, and then using that level to, in this case, get long. So yeah, let's just dive right into it. My setup here was on Nvidia. First, I want to talk about the fundamentals of it. 2 days prior to my trade, Nvidia had released a pretty solid earnings report. They had beat EPS and they beat on revenue. Their guidance was a little bit lower than analysts expected. And another important thing, in my opinion, was to note was that we had a tier 1 bank raise the target to 180, and we were trading below that price at the time. Something important to note as well is that back in February, Nvidia had also given out a yearly guidance, and they had said that their year was going to be overall flat on the revenue because it was declining in the first 2 quarters, and then they expected the gaming to ramp up in the second half.
Okay, so when I read that news just on its face, and again, just on its face, and when we make trades, we put multiple variables together, my first reaction to that when I read that news is I want to go find news that's more compelling. And then maybe circle back to this. Generally, I want to look for things that beat by more, have more explosive growth, or a bigger miss, and or they are giving us guidance for the full year. I tend to start looking for things that are giving us full year guidance in the direction of the beat or the miss. So if the quarter beats, I want to look for full year guidance beating. If the quarter misses, I want to see full year guidance missing. If the revenue beats, I want to see full year guidance beating. And this is not to suggest that these stocks are not worth trading. It is to suggest that if I'm not going to get that full year guidance, then I'm going to want much more on the technicals. I'm going to want a much better technical edge with my trading.
Yeah, that makes a lot of sense. And I do want to mention, now I'm understanding a little bit more what full year guidance, why it matters a little more. You could take you could take a trade and potentially even turn into a swing trade a lot easier that way because obviously, if the trade is in the direction of the guidance, then the swing could be easier.
Well, I'm glad you bring that up because, and I don't think if you are slightly confused about why full year guidance is so important, then let me fill in for others why it is. And it's because if I'm a big money trader and I'm going to put real money to work, I want to have lots of clarity as to what I'm putting my money to work into. A quarter is not going to get me as excited and is not going to give me the clarity to put a lot of money into as does full year guidance, big beat. That's why we talk about that. Now, I'm not suggesting it's the only way that big money people put money to work, but I am suggesting for you to think about what is big money doing? What gets people to risk a lot of money into an idea and into a direction? Is one quarter more likely to do it, or is a full year beat on guidance more likely to do it? The answer is the latter.
I will now get into the intraday fundamentals. Some important things to note about Nvidia was that the overall was 4.7. Very elevated, more than good enough for me to take a setup in this type of market. I'm sorry, RVOL. Beta was 2.1. Again, another check in Nvidia's favor. Stocks with a higher beta, I tend to do better in. My biggest winners tend to have a higher beta. And the stock was up 80% of an ATR from its previous close. I will get into why that's important in a second here. The ATR was 695. Average daily volume, 11 million shares, more than well enough for me to be in and out of the stock with big money if I need to be. And the last thing I want to note here is that these set of data points are basically meet a criteria that I have for a model called the Big Mover model. And what this tells me basically is that based off these data points in the morning, this stock is likely to close at high or low of day, depending on what direction we're moving. And the factors that go into that are RVOL, beta, and then the percent of an ATR it is from the previous close.
So before we get 10 questions on what beta is, in the comments section, what is beta?
So beta refers to how much the stock moves relative to the market's range, basically. So like a stock with a higher beta will react far more to fundamental news, or even like, let's say the market selling. A high beta name will sell much further, or will extend further to the upside or to the downside. So yeah, based off my big mover model, this to me says that Nvidia is likely to close at the high of day. So this matters to me because now I know that I want to intraday swing this position. I want this position till high of day. Till the close, which I expect to be right around high of day. Okay, so some higher time frame analysis. On the right side here, we have the daily. On the left side, we have the 30-minute chart. I'll get into the daily here. Basically, we're in this range between 175 and 135 after a large sell-off back in October. And so what this tells me basically is that this really isn't the best place to be, building a swing position into Nvidia. We're not at the top of the range. We're not at the bottom of the range. We're just in the middle of it. And so we're going to be having a lot of interactions with a lot of price levels. So definitely something to note because intraday you might get a lot of price levels getting touched, and so you get some weird reactions in the price action. That's just something to keep in mind. So something to note on the 30-minute chart here is that Nvidia started selling 2 weeks prior to earnings, all the way from 180 to 145. Yes, this was obviously fueled by some market selling and some, and whatever the Fed had done. But nonetheless, with good earnings, we were very oversold, and so gapping up and then holding that gap the next day was a pretty bullish sign. And so really, when stocks oversold in the higher time frame, you're looking for any signs of where the relief's going to start. And decent earnings is a great place to for a relief bounce, I would say. So my morning game plan was pretty straightforward. We were gapping into the 165 low, which is a pretty large gap. Prior day we had closed around 159.5. basically for me, what I was watching for was a break of 165 to the upside or a failure of 165. And this is also something that Steve had mentioned in his game plan as well. And so there's a lot of confluence point to this 165 level that I cared about. It wasn't just a long-term level, but it was pre-market high, which is a very important intraday technical level. And even Steve talks about it as a level where Nvidia could potentially fail on this day. Something important to note as well is that the prior day it participated in a late day market rally. The reason why I like to know this and why I think it's important to know is that we're seeing Nvidia not have relative weakness to the market here. If anything, it's having relative strength. It's trading with the market, and that's important. One more thing I want to note here was that I had the two-day VWAP set up on Nvidia as well. That was around 160, and I was looking for it to get there. It never did touch that price, but that was definitely Nvidia definitely did qualify based off prior day's fundamental info. It did qualify for a second-day VWAP setup.
All right, let's highlight one point. Go back one slide. So you make an excellent point that we'd rather have stocks outside of range, or meaning above range or below range. Good to note that. And then you make an excellent point, which we have to highlight, which is, if something is overbought on our longer term charts, on our daily charts, on our weekly charts, then that's going to make it more likely that the stock is going to go up when it has a positive news catalyst. You can't just trade in today's market and be an elite trader unless you're the very best of the very best of the very best scalpers, which there are some like that, but there's very few people like that. If you're going to trade this good setup well, you've got to understand context. You've got to understand context. You can't just come in, sit at your seat at 9:25, read a couple blurbs on the internet and decide that this thing is going to go up, or sit down and look through a couple of charts and decide that this thing is going to go down. You've got to be putting things together. And so, we've got a little bit of a news catalyst. We've got a little bit of an oversold condition. Now we're putting a couple of things together. Let's see what else we have.
Something that was important to also be looking at is, of course, SMH. Nvidia, of course, has its own weight in SMH. And so this is something that you want to be looking at. SMH is the semiconductor index for basically the semiconductors, the main ones being AMD, Nvidia, and MU. And so it's good to look at what the overall sector is doing, because most generally you will get a direct correlation between the index and the stocks themselves, right? So it adds a check in Nvidia's favor if SMH was rallying, But something to note here was that we were having the opposite effect. But I mean, this relative strength was so strong that honestly, SMH didn't even hold back Nvidia. And maybe if SMH was getting bought up at the time, Nvidia would be even going up more aggressively. But I just found it very interesting that we had such a strong rally from Nvidia. Meanwhile, the other semiconductors were taking a hit in the morning. It kind of took a check off, of Nvidia for me. That didn't make me feel, it didn't make me feel more confident. That it definitely made me feel a little bit more hesitant to get heavier here, because the whole sector was not participating in this rally.
What I like about this a lot is that this is a much better indicator to be looking at than the overall market when we have a sector that's overbought or oversold. So lots of times people make a rookie error when they're looking at Nvidia to be going and looking at the Qs, as opposed to looking at first the sector that it's actually trading in this case SMH. For this stock on this day, at this point in time, this comes first. Looking at SMH comes first before looking at Qs. Good job to be queuing that up. There's going to be plenty of times where this gives us another check in our favor, and that's going to help us to add or reduce risk.
Let's get to my entry and what I was thinking basically as soon as the stock opened. Initially I didn't expect the Nvidia to be so aggressive, but I mean immediately off the open, and this is the 15-second chart. I just want to clarify, which it's not like I'm using this at any random time, right? I'm using this at like 9:30 to 9:35 a.m. Max. So basically, you guys can see here is that Nvidia immediately runs above the 165 level. We had absolutely no sellers on the tape trading into the level, and as we came back down, the bid held, and basically started getting large prints, and we started trading off the level very aggressively. The first thing I did, whenever I see a stock that's gapping up a lot and it's immediately breaking its pre-market high, buyers are FOMOing in. They have FOMO, they want to get into the stock. And so you guys can kind of see that happen pretty quickly, because as soon as it gets above, it holds, and it never trades below 165. And that's not a reaction that I was expecting. And so, I immediately got long, not as much size as I would have wanted to, because of course, like I said, SMH was selling, and for a morning drive on Nvidia, I wasn't going to get too heavy here. But anyways, with that said, Nvidia quickly traded off the 165 level, and I have some tape to share as well that'll show you the moment where I saw it and where I started getting long when I saw Nvidia hold the bids on the tape. So let's. I don't want to say I literally count, but I want you to watch for how long it trades below 165 on the bid. So immediately we start coming off of 165. We didn't trade below 165 for a very long time. You can see the bids were stacked right below 165 and at 165. And then I just want to mention here, this is a large prints tape here that I have on my left. And you'll quickly see that all the large prints that go in on the tape, we start trading above very quickly. And that to me is a bullish indicator, because when I see large prints on the when I see large prints come in and then we start trading above those prints, it's safe to assume that was that was a long print. So that was my seat moment, and I know that was a little bit short, but
yeah. And look, I like when I see something coming into a particular level, in this case 165, and I notice that the offers get immediately bought, and I notice the stock can't really hold below a level, that can be an indicator on the tape as a bullish signal. And so if you're looking for something to get long, you're dusting off your playbook to get long, and you're reading the tape skills, searching for those areas where there is strength. And so, as you were showing, as it's coming into 165, it's really not able to stay there, and the offers are being taken pretty quickly, and the order flow is bullish. So the other thing I just sort of want to point out that you brought up, which is if you can't get in at a good price, but you really like the idea, you really do have to hold back risk. You can't be going tier 5 when you're not getting something at a good price. You have to be scaling back and being a little bit more realistic as to how much you can get in. And so I like the way that you were thinking through that. You really wanted to be long. You did get long, but you couldn't get as long as you really wanted to because of price. There was too much risk to get long at that price at that time. If it would have pulled in and this was lower, and you saw the same thing on the tape, you would have been able to, and you should have gotten a lot bigger. But you used your judgment very well in real time. You used your critical thinking skills very well in real time. You thought quickly in real time exceptionally well, and you made the right decision. And I would suggest that you made the right decision because there's a lot less things for you to think about, because you're better prepared and you're thinking through things more systematically, and you're getting to the important things more quickly. You know what to look at by going over these playbook trades, by doing these playbook trades, by going through our training. You're thinking about maybe one or two things as opposed to 10 things, and even being confused about whether or not you should be looking at those 10 things. So good. Anything else we need to know about this trade?
Big notable things, of course, was this tape at 165. Even here at the paused image, you can see how stacked, the bids are over here. this is my trade executions here on TraderView. Interesting to note. This is where I kind of wish I had more size in this purchase over here. As soon as I started seeing a lift, I added more size over here.
Let me say this, which is you were in it, you experienced it, you profited in it, you had a positive experience in it. That is a strong position to be in, as opposed to I missed it, as opposed to I bought it and sold it way too early. You can build from this. So good. What do you want to improve on with this trade?
And so that's a really easy question for me to answer. The first things first is I really wish I was so stubborn that the 2-minute would pull in or the 5-minute would pull in back for a retest, but it never did. It consolidated higher all day and it actually just kept moving higher into the close. So I wish I wasn't so stubborn about getting that 165 level again, but I think my first entry was so perfect that my mindset was I'm not getting in that from price size 165. But if anything, that ended up hurting me at the end because I think there was tons of great spots to add on later in the day. The second area of improvement, and I'm going to keep putting this one over and over into every single playbook until every single one of my setups is automated. But this is just another setup that is a great candidate for being, to be completely automated. Everything that I did could have been done by a bot because it was very systematic. Of course, what I saw on the tape helped me get long, but quite frankly, a bot taking a risk once the stock trades above 165, could be just as good, so that I could be paying attention to another stock, in the morning. I mean, the tech at SMB allows you to get long 165 if it breaks above. So it's pretty simple for me to have to do that in the future on a lot of setups. If I see setups like this, multiple of them, in the morning.
Yeah, so 3 things about that. You don't have to go from 0 to automated trading. You can think about going from 0 to filters. How do I build some filters that look like that setup? How do I build some scripts? How do I build some automation that gets me into a trade automatically like this, and then I trade out with discretion? And then lastly, how do I work on an automated trading model? Can you go back to the beginning? I want to make a point about your trading that I'm seeing come up repeatedly. And I don't mean this as a negative. I mean this as a challenge. And I think of my trainer who cracks me up every time he corrects me. And we're working on deadlifts lately, and he says, good, but it would be even better if. So I'm going to play my trainer to you on you, if that's okay. And keep going to the beginning.
Okay.
So good, you're doing good here, all right? But I would like for you to understand the difference between we beat on a quarter and a trade that you're eventually going to show me, which is we beat by a lot and we're raising full year guidance. Make sense? And for that trade, I want you thinking about saving a lot more risk for. That trade, I want you being a lot bigger in. And I want you thinking of these things across the spectrum of, okay, this may be a trade to make, but it can't possibly be as good as a trade when they crush earnings by a lot and they raise by a lot for the full year. Plus, you're setting up a lot of really good technical trades, but there's going to be better technical trades. There's going to be better, more significant levels that are breached. As you mentioned, this is in the middle of the range. You got to be thinking about saving more risk and being bigger when we're trading outside of ranges. When we're just getting above really significant technical levels, for instance, in Beyond Meats, when we finally got below that 160 level the other day, that is not the same technical level as what you showed me. And it's kind of the same type of technical trade, but when we get below that 160 in Beyond Meats, and this is the way you're trading, I want you saving more risk for a trade like that. I want you putting on more risk for a trade like that. And it's okay to be keeping these trades, but it's not okay not to differentiate between the ones where you put on a lot more risk and really build out your career and the ones that pay the bills. So great to be working on these, great to be adding these to your playbook. but you got to be understanding, where the really big money trades are going to come from, and we're getting there, but we're not quite there. Good, but could be better. Does that make sense? Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.